Welcome to the Retirement Briefing. Today, we're talking about Supplemental Security Income, better known as SSI. Although millions of Americans rely on this program, it's also one of the most misunderstood. Many people assume SSI is simply another form of Social Security retirement, while others confuse it with Social Security Disability Insurance, or SSDI. In reality, SSI is a completely different program with its own eligibility rules and funding. SSI is a federal assistance program designed to help people who are age 65 or older, blind, or living with a qualifying disability, and who have very limited income and financial resources. Unlike Social Security Retirement or SSDI, SSI is not based on your work history. You do not need to have paid Social Security taxes or earned enough work credits to qualify. Instead, SSI is funded through general federal tax revenues. Its purpose is to provide a basic monthly income to people who have limited financial means and need help meeting essential living expenses such as food, clothing, and shelter. As of 2026, the maximum federal SSI payment is $994 per month for an eligible individual and $1,491 for an eligible couple. However, these are maximum federal amounts. The actual payment you receive depends on your income, living arrangements, and, in some cases, your state of residence, since some states provide additional SSI supplements. Here's a simple example. Imagine Mary is 70 years old. She never worked long enough to qualify for Social Security retirement benefits and has only modest savings. If she meets the SSI income and resource limits, she may qualify for monthly SSI payments to help cover her basic living expenses. Throughout this video, we'll explain who qualifies, how SSI payments are calculated, what income and resources count against eligibility, and some common mistakes that can reduce or even stop benefits. By the end, you'll have a much clearer understanding of how SSI works and whether it might apply to you or someone you care about. Now that we've explained what Supplemental Security Income is, the next question is simple. Who actually qualifies? To receive SSI, you must first meet one of three basic eligibility categories. You must be age 65 or older, be blind, or have a disability that meets the Social Security Administration's definition of disability. For adults under age 65, that generally means a medical condition expected to last at least 1 year or result in death, and severe enough to prevent substantial work. Children with qualifying disabilities may also be eligible under separate rules. However, meeting the age or disability requirement alone is not enough. SSI is a needs-based program, which means the Social Security Administration also looks carefully at your income and financial resources. Income can include wages from a job, Social Security benefits, pensions, or financial help you regularly receive from other people. Some income is counted in full, while other income may be partially excluded when determining your SSI payment. The SSA also limits the amount of resources you can own. In 2026, the resource limit is generally $2,000 for an individual and $3,000 for a married couple. Resources include things like cash, checking and savings accounts, stocks, bonds, and certain other assets that can be converted into cash. The good news is that not everything you own counts against these limits. In most cases, the home you live in is excluded. One vehicle used for transportation is usually excluded as well, along with most personal belongings and household goods. You must also generally be a U.S. citizen or meet certain qualifying non-citizen requirements, and you must reside in the United States or certain U.S. territories. Let's look at two simple examples. John is 68 years old, has very little income, owns the home he lives in, and has only $1,200 in his bank account. Even though he owns a house and a car, he may still qualify for SSI because those assets are typically excluded. Now consider Susan. She is 45, has a qualifying disability, but she has $25,000 in savings. Although she meets the medical requirement, her financial resources are well above the SSI limit, so she would generally not qualify unless those resources were reduced to an eligible level. As you can see, qualifying for SSI isn't based on just one factor. The Social Security Administration looks at your age or disability, your income, your financial resources, and your living situation before determining whether you qualify for benefits. Now let's look at the question most people ask. How much SSI will I actually receive? The answer depends on your individual circumstances. While the federal government sets a maximum monthly SSI payment, the amount you receive can be reduced by your countable income. The more countable income you have, the lower your SSI payment may be. Let's start with the simplest example. Imagine Robert is 67 years old, has no job, no pension, and receives no Social Security benefits. He meets all of the SSI eligibility requirements and has no countable income. In that case, he could receive the full federal SSI benefit. Now consider Linda. She receives $500 per month in Social Security retirement benefits, but has very limited savings and no other income. Because part of her retirement benefit counts as income, her SSI payment would be reduced. Depending on her circumstances and applicable income exclusions, she could still qualify for partial SSI benefits that help increase her total monthly income. Here's another example that connects with our previous video about Disabled Adult Child, or DAC, benefits. Suppose Michael receives an $800 monthly DAC benefit after his father retires. SSI first excludes the first $20 of unearned income, leaving $780 in countable income. The SSI calculation would then subtract that $780 from the maximum federal SSI payment of $994, resulting in an SSI payment of approximately $214. Michael would receive about $1,014 per month when his DAC and SSI benefits are combined. Now let's look at someone who works part-time. Suppose David earns a small paycheck each month while receiving SSI. Many people believe that earning any income immediately ends their SSI benefits, but that's not how the program works. SSI excludes the first $20 of income, then the first $65 of earned income. After that, only half of the remaining earned income is counted when calculating the benefit. This means many people can continue working part-time while still receiving some SSI, although the exact amount depends on their earnings. These examples show why there is no single SSI payment that applies to everyone. Your monthly benefit depends on several factors, including the type of income you receive, how much you earn, and which income exclusions apply to your situation. For that reason, it's important not to assume that you're ineligible simply because you already receive another benefit or earn some income. Many people are surprised to learn they still qualify for partial SSI payments after the rules are applied. Now that you understand how SSI eligibility and payments work, let's clear up some of the most common misunderstandings that often prevent people from applying or cause problems after they begin receiving benefits. One of the biggest misconceptions is that you can't receive both Social Security benefits and SSI. In reality, some people qualify for both. If your Social Security, retirement, survivor, or disability benefit is relatively low and you meet SSI's financial requirements, SSI may provide an additional monthly payment to bring your income closer to the federal benefit level. Another common misunderstanding is that owning a home automatically makes you ineligible. In most cases, that's simply not true. The home you live in is generally excluded when the Social Security Administration determines your SSI resources. Likewise, one vehicle used for transportation is usually excluded as well. People are also surprised to learn that an inheritance or a financial gift can affect SSI eligibility. Receiving cash or other countable assets may increase your resources above the program limits, even if only temporarily. If that happens, your SSI benefits could be reduced, suspended, or stopped until you once again meet the eligibility requirements. Another costly mistake is failing to report changes to the Social Security Administration. If your income changes, you move, get married, receive an inheritance, or your living arrangements change, you should report those changes promptly. Failing to do so can result in overpayments that the SSA may later require you to repay. Finally, many people assume that once they're approved for SSI, they never have to think about eligibility again. However, the Social Security Administration periodically reviews both your medical eligibility, when applicable, and your financial situation to make sure you still qualify for benefits. The key takeaway is this: SSI is designed to help people with limited income and resources. But keeping your information accurate and up to date is just as important as qualifying in the first place. Understanding the rules and reporting changes on time can help you avoid unnecessary interruptions to your benefits. As we wrap up, here are 7 practical tips that can help make your SSI application process smoother and reduce the chance of unnecessary delays. First, gather your important documents before you apply. This includes identification, financial records, bank statements, information about your income and resources, and, if you're applying based on a disability, your medical records. Second, be completely honest and accurate when reporting your income, resources, and living arrangements. Even small mistakes or missing information can delay your application or lead to problems later. Third, keep copies of everything you submit to the Social Security Administration. Having your own records can make it much easier to answer questions or resolve issues if they arise. Fourth, respond promptly if the Social Security Administration requests additional information. Missing a deadline can delay a decision or even affect your eligibility. Fifth, remember that your responsibility doesn't end after you're approved. If your income, resources, living arrangements, or marital status change, report those changes as soon as possible to help avoid overpayments or interruptions to your benefits. Sixth, if your application is denied, don't assume that's the end of the process. Many people are approved after filing an appeal or providing additional information. Understanding the reason for the denial can help you decide what to do next. And finally, don't assume you're ineligible based on something you've heard from friends, neighbors, or social media. Every situation is different, and eligibility depends on your own financial and personal circumstances. Supplemental Security Income can provide an important financial safety net for older adults and people living with disabilities who have limited income and resources. While the rules may seem complicated at first, understanding the basics can help you make informed decisions and avoid costly mistakes. If today's discussion sounds like your situation or that of someone you care about, don't rule yourself out. Gather your financial information, contact the Social Security Administration, and determine whether you qualify. you may be entitled to benefits that can make a substantial difference in your monthly income. Thank you for watching the Retirement Briefing. If you found this video helpful, please consider subscribing so you won't miss future episodes covering Social Security, Medicare, retirement planning, and other topics that can help you make informed financial decisions throughout retirement.